Good afternoon, ladies and gentlemen. I'm Shweta Shetty, partner with Deloitte India. It's been a while since I've been on a live stage, talking to this eminent panel. So I'm really excited about this esteemed panel here today, and most importantly, very excited about the topic itself, fast-tracking the adoption of innovation. So without much delay, I would like to jump into questions, but before that, I'm going to quickly pass on the mic for a quick self-introduction from all of you. But one more request. If each of you could define innovation in a sentence, what innovation means to you, that'll be super. So, over to you.
Yeah, good afternoon all. I'm Ankur Vashne, Deputy Chief Technology Officer of IDBI Bank Limited, operational from CBD Belapur office. So for me, innovation is taking risks, chartering the unparalleled roads, or taking risk, exploring the unknowns, and that's it. So when I say risk, it is smart risk. Thank you.
Hello everyone, this is Shweta Das from Ugro Capital. Thanks for having me here. Thank you, Shweta. We are a SME lending company. We are a listed SME lending company, and we are working hard to solve the unsolved credit needs of the SME sector in India. As Chief Innovation Officer, my role entails finding out data-centric solutions for giving credit facilities to customers in all forms and shape, with the smart use of alternate data, ML, AI, and the tools of technology. What innovation means to me, I think understand what the customer needs and then find out a solution without being constrained by existing knowledge.
Hi, good afternoon, everyone. My name is Jasmine Gupta. I come from the banking industry, so I've spent some 18 years in HDFC, Kotak, and Equitas, and I've launched a couple of neobanks also in the last 2 years, which is NeoX and Frio. Having spent a considerable time in banking industry, I've made my move to fintechs, and I've joined as CEO and co-founder of Lakshmi, which is an Anand Rathi-backed fintech for creating India's first financial platform for women. So that's the brief introduction. And for me, if I have to describe innovation in just one sentence, I would say when 1 + 1 is not equal to 2, but it is 5, 7, 10, 15, that is innovation. Thank you.
Good afternoon, everybody. This is Mayur Modi from Moneybox Finance. I'm the co-founder of Moneybox Finance. We are a listed entity, and we cater to small business loans in the tier 3 and tier 4 cities. So we operate on a hybrid model in these locations. Innovation for me, I think, needs to convert into a very superior product or an user experience. It cannot be incremental, it needs to be very superior, and ultimately it needs to lower the cost of doing business. So that is what I think innovation should lead to ultimately.
Hi, good afternoon, everyone. My name is Bertram D'Souza, and I'm the Chief Product and Innovation Officer at Protean eGov. Protean eGov is actually the new avatar, and I'll introduce the new name of the company, which was earlier called NSDL eGov, as we pivot and go into new products and new markets. As part of my role, and to answer the second question of what innovation means to me, it's doing a lot of the major shifts to create new business outcomes, which requires a lot of R&D, and you never really know what those experiments will be, and a lot of the small ones as well. So it's not just the big ones, it's a combination of both big and small.
Good afternoon, everyone. My name is Harihar. I work with a company called Sunfire Technologies. We help enterprises and organizations to basically accelerate their entire application modernization requirements, which means the applications which are developed a few years ago, those are evolved over a period of time, like business models have evolved, consumer consumption patterns have evolved. Applications also need to get modernized, and we work with organizations and help them to modernize their apps. Innovation, for me, I think, if I have to put it, is basically challenging the status quo and overcoming the fear of failure, which to me is innovation.
Sure. So I think very, very interesting thoughts on innovation. So let me jump into the first question. The question is that with every innovation comes the challenge of building it in a totally new environment, or dovetailing it into the existing environment that you operate in. What are the pros and cons of each of these models? And if given a choice, what would you prefer? So maybe I'll ask you the question first, Mr. Ankur, for your response.
Of course, there are various models in which we can have a new deployment coexist with our existing ecosystem and integrate with seamlessly, right? But it is easier said than done. Generally, what happens is because of the interface requirements or the cutting edge innovations that are happening now, and on the back of legacy which we are sitting as a various banks or larger corporations. So there is always a challenge of interfacing, because of which, of course, we can write middlewares, we can do converters to basically fill certain gaps. But then the requirements of a on-demand, turn-off, turn-on kind of a model is not always there, because of which reason it is always prudent to have a segregated deployment or a segregated ecosystem for new innovations to be integrated into the brownfield projects which we already have. Having said that, there could be many other use cases also wherein a ground-up modernization could also be a promising endeavor. However, in any migration, there is always a coexistence of an old system and the new system which is coming up. So only after stabilization, which may take anywhere from a couple of quarters to a couple of years, right? So the management can take a call to actually decommission the old line and serve the full traffic from the new line. So it takes some time. That is precisely the reason why we will want to have the new setup segregated from the other or the existing ecosystem till the time we have sufficient confidence that it will gel very well with the existing systems. So of course, any greenfield projects for that matter, we always have a temptation to bring in a lot of transformation all at one shot, but that doesn't happen that ways. What I generally follow is a Mikado principle: change one thing at one time, and the rule of three, which is change three things at a time or in a group of priorities, so that we can have a tangible outcome as well as least disruption to the business continuity, because we have to think of the business as usual functions also. So I submit my point of view with this. Thank you.
Thank you. Mr. Das, if I were to come to you as the Chief Innovation Officer, this must be a challenge for you most times. So how do you look at this?
Thank you, Shweta. It's a great question, and of course, all of us can relate to this question pretty much. Of course, what we feel, a straight answer from the heart is we would like to take the new solutions and adopt them in their entirety, because that is really the core essence. Many a time, and particularly with technology-led innovation, they do not really come about as an extension of something which is there, but they come about as a totally new thing. And so the impulse reaction is always to adopt that. Of course, there are pros and cons, and of course, taking something up straight up, that is radical, that has very high impact, but at the same time, that is a high degree of change management. And on the other hand, if we take a stepwise approach or a smaller path, that is the path of a lesser resistance. At the same time, it is slower in terms of progress. Sometimes there's the risk of, let's say, abandonment. I would say it's best understood in the following way. Whenever there's an innovation, in our case and in financial services, many a time it will manifest as an end product for the customer. However, underlying that, there are things that one has to solve. For example, the distribution of the product, the way to underwrite the product if this involves lending to customers, which is the case for Ugro Capital and other NBFCs, and also the fulfillment journey. And each of these three things can become innovation projects of their own, independent of the main product which you're trying to bring to market. And I think the right approach is a combination of these things. I can speak a bit about something that we have done. We are an SME lender, and one of the things that we have always done differently right from the start is we have looked at a SME through the lens of their industries and their sectors. So we are trying to solve a large credit gap. I'm describing a problem statement which we're always trying to solve. We are trying to solve the credit gap of SMEs in India, which contributes to 1/3 of India's GDP, yet largely unpenetrated. Yet the solutions that we have largely, they are in many circumstances one size fits all, and the methods are a mix of largely physical, difficult to scale. In this circumstance, if we have to create a solution where we can have scalable answer to this kind of a problem, how do we go about that? And one of the first things we said that it has to be looked through the sector. So a manufacturer who's supplying to Maruti, and getting one payment in 90 days versus a dentist who's maybe having 20 footfalls in a week, and that's good business, to a retail store in a small tier 3 city whose daily cash flow is really giving us a picture of his situation. All these entities are very different, but yet we are trying to solve and have a method of understanding them and giving them a credit solution. We understood the most efficient way of doing is by using a data tripod of the credit history, the bank statement records, and the GST transaction data. Combine them using MLAI models and have proprietary lending models. This gives rise to three different things. Having this kind of data itself and keeping them and storing them and making them amenable to this kind of work is itself one task. Second task is developing those models, where using these models and developing data is not a standard thing. And the third is deploying these models, creating a customer journey. In our case, we have actually done each of these things. In the first instance, we have taken API integrations for all the data sources. We have had a data storage setup which can accommodate that. Secondly, we have deployed these models. And thirdly, we have also developed, in principle, an ability to give a decision in 60 minutes through a completely digital journey. So this is an example where we have actually taken the first of the solutions, imbibe everything new. But to conclude, I would say that one would take a balanced view in terms of business context and try to do a mix of both approaches, while the heart will always go for the new solutions.
Sure. Thanks. My next question is that, financial services, the sector itself, we've seen a lot of innovation over the years, and more so in the last 2 years, right? So organizations, financial institutions are reimagining their business models. What was conventional, traditional is no more relevant. There's a lot of innovation happening. How do you, which of these models do you see emerging in the new normal, as we call it? And what do you think is going to be sustainable long term? So maybe I'll start with Mr. Deshpande.
See, to be very open with you, I think the many models which are traditionally never existed, and we suddenly saw them coming in. A very small thing like we've traveled, all of us travel, right? And we saw that we used to go on wait on the toll nakas and pay the money more from cash perspective, and now things have become pretty smooth with the introduction of things like FASTag, where your payment wallets and other things, your bank accounts are all connected. I think models are evolving, and some of these innovation things which are also adding a lot of value to the consumers, and a lot of these demands are also actually getting originated from consumers. A simple thing like ease of making a payment, not carrying the cash, the hassle of carrying the cash and all these things. So I think some of these models are getting originated from the consumer and which are also getting fulfilled from the financial services perspective. So this is one part of it, and the second part of it, things like how do we really fast track these innovations and reach to the places where you have originally never been to. Things like banking, which is now being done in a digital manner, and very less often we're now attending or going physically into any bank. So I think various models which we have not seen earlier are coming up now, and I'm sure a lot of things will keep coming in from the banking perspective. Of course, a lot of co-panelists here who carry huge banking and financial services experience may add more to this.
Thank you, thank you. Mr. D'Souza, if I come to you on the same question, there's a lot happening globally on, areas of open finance, areas of central bank digital currencies, and so on. What's your take on how do you see some of these models emerging in India?
Thanks, Shweta. I think looking at global markets, there are some areas where they've actually laid the roads before us. Like if you look at PSD2 and the open banking standards, they've thought of it, they've implemented it in a very different way from what we've started to do in India. But if you look at India in a global context and what we have achieved with the whole digital public infrastructure, and I think looking at India Stack as an example, which I keep giving references to, starting with the paperless, the presence-less, and now the next layer of identity and data. I'm personally very excited to say that both payments, which UPI has helped solve, you look at identity, which is solved with Aadhaar, and now we're going into new methods of giving independent access to your own data using frameworks like the account aggregator. This is very unique, doesn't exist globally, and we're actually setting a very unique, first of its kind trend worldwide. On the back of some of these, I actually see the market opening up for innovation. So if you look at fintechs today, maybe 10 years ago, none of us would have imagined we do our banking transactions from a non-bank app, right? And like what Jasmine spoke about, launching neobanks. Neobanks was not even a term 10 years ago. So what's happened in the last 5 to 10 years? We've had the unbundling of finance in a sense, where innovation doesn't necessarily need to happen within the financial institution. It happens through collaboration, through partnerships, and with some of these digital public goods as well.
Interesting. Mr. Modi, if I come to you, at Moneybox, you must be seeing innovation day in, day out. So what are some of the models, emerging models that you'd see in the market going forward?
It's interesting. Like, see, when we started off the idea of Moneybox, providing financial services to people living in tier 3, tier 4, where they don't even have access to basic financial services. How do you kind of reach out to them? How do you make sure that they come to you, avail your services, make them aware of the ecosystem that is there for them to be able to kind of avail those services. So I think innovation for different people would mean different things. I think for us it meant that we go to the very basic of innovation. Education is very important. We made sure that they understand what are we offering. Some of these services, some of the applications that we wanted them to use to avail some of these services was a challenge. So that is why we kind of adopted a very hybrid model. We said that the pure fintech model is not going to work in our case. We realized that very early in our journey. We thought that the adoption will be very fast, but it's not the case. You see adoption of technology and innovation in tier 1 and tier 2 very fast. The moment you start going beyond tier 2, tier 3, 4, 5, and 6, I think people still struggle with technology a lot, I think. So we made sure that we use very simple interface. It's a very assisted model in a sense. We sit with the customer, we tell them to fill information on our app, giving our application, so that they understand the whole journey and the whole process of availing from some of these services. From there, 3 years now, I think what we are seeing is a lot of inquiries, lot of requests are starting to come on their own, because of the fact that a small ecosystem is getting created in terms of adoption of technology and services. And now we are trying to kind of, bundle more services, more products, because we feel comfortable that they have understood what we are offering and they have understood the basic technology that we wanted them to understand. So I think, again, as I said, it's very, very, so now for us, from there, now we want to go to some of the other services, investment products, we want to cross-sell some of these products. Now I think their technology and innovation is helping us a lot, because we have so many other players whom we want to partner with, the insurance tech, the wealth tech. We are talking about smart gold in the form of savings, where we can offer them every month they can actually save 500 rupees in the form of a gold, and then avail credit services against that whenever they need to, or monetize that asset whenever they want to. So goal-based. So we are working on some of the very exciting stuff in terms of very, very basic products, but yes, for a very different kind of an audience or customer base.
No, I think it's very heartening to see, talking about innovation for tier 3, 4, and the rural territories. But what's even more heartening, Jasmine, coming back to you, is that to talk about more than 50% of, almost 50% of our population, women, you delivering financial services products to them. I think there's a cross, obviously, between the geography and the gender.
So 40% of our customers are women today. So they are the primary borrowers in our case.
Yeah. Right, and I think when we talk of emerging business models, it's we've observed, so globally also we've observed that newer models are coming up. And so we have seen some countries where they've actually given licenses to digital-only banks. We have seen licenses only for neobanks. I think India, we don't know how the journey is, but we have actually started with this 75 digital banking units that's been announced in the budget, and now that RBI has also allowed the banks to start with. I think it's the journey in the right direction for creating the best possible business model. And for banks as well, to survive in this industry, which is, now there are very few boundaries between fintechs and banks, and I think it's going to get, going forward, it's going to get blurred much more. So we've also seen newer emerging business models of challenger banks, banks within banks, fintechs within banks also coming up. So I think these are the emerging business models which will change the entire ecosystem next 5 years down the line, is what we envisage.
Very interesting. Okay, maybe I'll move on to the third question. The success of innovation is always looked at in terms of customer stickiness, customer experience, top-line growth. But all of this somewhere is dependent on the underlying infrastructure. The infrastructure, while it plays the back-end role, how do you think preempting some of the infrastructure challenges will really drive innovation? So if I start with you, Mr. Deshpande.
Yeah, I think a good infrastructure at the bottom will certainly define the overall success of innovation at a layer which is going to be built over on top of it. But I think from an infrastructure perspective, if we look at building resilient, available, secure, and most importantly, scalable infrastructure, which is elastic in nature. And when I say elastic in nature, we would experience both scale up as well as scale down. And these kind of robust infrastructure at the bottom are the ones which I am sure are going to contribute big time in terms of the success of any innovation. While having said that, it's also very important from keeping in mind the data sovereignty and other aspects which also come in, especially from a regulated industry like financial services, where how do you really collaborate, keeping your cost low and remain more operational excellence, bringing operational excellence in picture, build hybrid and hybrid cloud of an environment, which from an infrastructure perspective is definitely going to be one of the pivot in the innovation.
Sure. No, thank you. Mr. Ankur, if I come to you with your scale in terms of both the customer base and the complexity of the organization, how do you tackle infrastructure challenges, and how do you, keep yourself up to date on that?
Thanks for that. So when we think about infrastructure as a service, although notion-wise it's quite jazzy, the matter of fact remains that infrastructure is one of the overlooked or ignored aspect of any innovation or business function today. So when we talk about the larger organizations, so not talking about the SME kind of startups or companies which have natively grown onto cloud. I'm talking about the companies which have lived for 50 years or 100 years of existence or even more. They have a mindset. Now, when you say about the elasticity that Harihar just pointed out, it takes humongous effort to convince the organization to take a decision of moving some workload onto a something which is available with inherent elasticity as a tenet, as an important tenet of the infrastructure backbone. It takes humongous effort. Nonetheless, organizations have realized the importance of building in infrastructure resilience in last 5-6 years or 7 years, especially in last 2 years because of the pandemic, wherein the footfalls were decreasing. If I talk about the banks, the branches were almost shut down. They were, even if they were functional, they were very thin presence of customers, very remote presence of customers. Despite of the fact that banking is one of the essential services without which the mankind cannot function, right? Because there's an exchange element for any service which is being delivered or which is being consumed. So the exchange element is money. So when there's a money, there's a bank or any financial institution which comes into play. So in last 2 to 3 years, we have realized that infrastructure readiness is paramount. And because of which reason, a consortium of member banks, I think 13 or 16 in number, they have submitted a paper to RBI recently to break the jinx of how to move to cloud, even if for that matter it is moving to a public cloud, some of the non-critical workloads, or maybe having a having a checklist of do's and don'ts, which will help the banks to migrate to cloud. Now, moving to private cloud or moving to public cloud is still a dream for many of the banks, but nonetheless, almost all the banks have their private cloud, on-prem private clouds basically, which kind of offers some capabilities of a pure, dynamic, elastic in nature, hyperscale cloud, which is there with several of the public cloud providers. The cost of provisioning a virtual machine is not only measured by the underlying resources, but actually the timeliness with which it is delivered or commissioned. Now, whenever we want to do some experiment or a prototype, there's always a question of where to get the required resources from, because most of the fintech companies they are built on OpenStack, which doesn't gel very well with the existing infrastructure or the ecosystem of especially the banks, which are governed by several regulatory and compliance aspects, right? And that brings me back to the first question of the coexistence of the brownfield and the greenfield projects, which becomes even more paramount in slightly older organizations like the banks or the insurance companies which are there. Although I think almost all of them have realized the necessity of infrastructure to be relooked at as a technology, as an investment which will give a huge return on investment, because at any given point in time we have to be ready for 10x kind of a growth, which may happen because of any unprecedented events like Corona happened 2-3 years back. So it gave us a lesson that at any given point in time we had to be ready with our infrastructure capabilities on a war footing basis.
Sure. Thank you so much. And taking your point ahead in terms of, balancing what you have with, innovation, my next question is that innovation has no precedence per se. I mean, most of the times doesn't have a precedence, doesn't have a defined ROI, which essentially means that the support in the initial days is tough. How, as organizations or, individuals, have you dealt with this challenge of innovation? Maybe Mr. D'Souza, if I can.
Thanks, Shweta. So at Protean, we do it very interestingly. We have two different teams that look at innovation. One is the team that I run, which is more product and innovation, where we look at new innovations from a business model, from an ROI, from a market opportunity perspective. So if there's something new that we would like to get into, I think it's fair to put a time frame around it and to go about that innovation in a very measured manner. So not just being all out, or at the same time not taking risks which are unnecessary at a very early age, looking at some of the assumptions you made and evolving as you move along. I think that's been one area which we have done relatively well. And the thought process over there is any new product that you build always has the customer element to it. When you create this new product from scratch, you build it assuming it will work. But when you take it to market, the market says something else to you. So you need to keep turning it around. At some point, you may realize this product doesn't make sense at all and change it or shut it down. So I think that's something which needs to be done very brutally in any organization it's necessary to build. The second innovation lever that I mentioned about is more on the technology side. Today, if you look at emerging tech and you look at some of the new use cases out there, they aren't matured enough to really put a number or an ROI around it. So are we going to not do any innovation on blockchain? Are we not going to touch crypto? Are we not going to look at AI, ML in experimental dimensions? I think the answer is no. And I think that's where there needs to be a little longer term view on such innovations that happen without really measuring it only from an ROI lens. And I think looking at, again, coming back to my previous point, that I spoke about on the account aggregator framework, for example, the amount of data that it's bringing into the lending ecosystem today, and you have new contributors to it every month. So you have banks who have predominantly been there so far. Now you have SEBI who has said we will join hands. You have insurance companies, soon you will have telecoms, and we'll probably even have billers. So imagine the amount of data which can be shared with a potential lender in a consented manner, which can then be used to create a much sharper profile and a persona of an individual. For me, that's true innovation, at its maximum potential. And I would love to see a lot of fintechs and financial service firms actually make the most use of both the AA framework as well as the new ONDC framework, which has been talked about significantly recently. ONDC will also allow companies battling for customer engagement to build commerce journeys in their own apps. Commerce doesn't need to happen in an Amazon or Flipkart anymore. It can now get decentralized or unbundled. And again, that opens up opportunities both for banks to bring customers back into their digital apps, or for fintechs who do other services today on a consumer-facing app and actually create an engagement layer, which is not just throwing cash back. It can be differentiated on experience. So that's my 2 bits.
Sure, thanks. Mr. Deshpande, if you can add on to this question.
Yeah, I think Mr. D'Souza covered it quite well, and has also shared few very exciting things. But I want to add just 2 cents to it. I think it's a question that every organization, every individual, and people who are responsible for driving the growth, driving the innovation need to, sort of answer this to themselves. Do we want to stop here at any point in time, or do we want to continue our journey? I think one very important point is that you talked about is ROI. The way I look at it individually, of course, is it's not always that you go back in the history and try and find ways and means to, establish an ROI. You could also probably look at the aspects such as the cost of opportunity lost for not innovation, by not doing innovation, could also give you enough motivation and enough data points so as to, prove that, yes, innovation is required. What one can do for that matter is start small. Create sandbox kind of a environment. Do pilot in a very miniature model. And of course, like Mr. D'Souza said, the feedback has to be continuous. The transformation has to be continuous. So as you learn, as you create new framework, as you do new collaborative engagements, there's a lot of feedback, there's a lot of learning that you get. And this is how I'm sure your small sandbox environment can evolve and then probably become a bigger, more established, and more successful innovation going forward.
Yeah, thank you so much. I think I'll come to the last question for today's panel. Today businesses are all about, simplifying, your operations. It's about collaborating, a lot of collaborations between traditional players, non-traditional players, challenger banks, so on and so forth. How are your organizations tackling this? How are you trying to make it simple, efficient for your people? And I'd like to actually add another question here, is that innovation is also about falling, about failures, about challenges. It's not all hunky-dory all the time. So what is your mantra to yourself and your teams to really keep innovating despite the challenges? So, Mr. Das, if I can ask you this one.
Sure. Thanks, Shweta. On the first one, I think, how do we go about that? I would say there are largely 2 things that we try to do. One is make it a part of the design. So whenever we say innovation or we do something where we are trying to create a new thing and solve a large problem, it's always a part of the design which sits at the heart of the business model. That is essential. And the second thing would be to really take everyone along and explain to everyone how it affects each one of us. When we are taking a product to customer, there are multiple teams who are working. They are led by or incentivized individually through their own carers and everything. And when an innovation becomes successful, all of them are successful. So I think I would say these two things. One, keep it at the heart of the design, and two, explain to everyone what it means to them and drive it cross-functionally. The second part of the question, sorry, can you say the second?
It's about simplifying.
Yeah, and how do you deal with the failures?
Yeah, how do you deal with failures?
I would say that we assess very carefully whether the failure is because the original thinking and the premise was wrong. If that is the case, then one has to go back to the drawing board. But if the design was right, but we did not get the desired result for a little execution lapse for various reasons, then there's absolutely enough reason to keep trying. So I think the second situation is what we encounter the most, and that is how we look at it.
Interesting. Jasmine, Dr. Jasmine, if I come to you, what is your mantra of, not having failures impact your innovation spirit?
So I can be the last one to end it up, sure. So I think when we talk of innovation, there's one great book called Inside the Box, which is by Jacob Goldenberg. I definitely recommend it to all. And that's where he says that for innovations, you don't need to look far. You find solutions to problem statements within the ecosystem. And that's what we observe and see in the financial ecosystem as well. And when you were talking of simplifying and collaborating, I think there are enough and more use cases and enough and more solutions that collaborations can definitely bring to the table. So when we talk of banks, what do banks bring to the table? They have strong systems, strong processes, they have compliance, regulation. And what do fintechs, for example, bring to the table? They have agility, speed to market, nimble-footedness. So I think when a collaboration happens, it's a win-win for all the players in the industry. And I think the need of the hour is innovative, ecosystem-based solutions. The important thing to note here is that one size doesn't fit all. And hence, we need to have solutions which are very target segment specific. And we have so many opportunities. Like for example, we need solutions for MSMEs. We need solutions for factory workers, for blue-collar workers, for gig workers, for salaried, for women. I think there's a whole lot of ecosystems, fishermen as an ecosystem. Their financial needs, their requirements are very different from what another segment would require. So I think the need of the hour is to build unique solutions for these ecosystems, and that's where the entire ecosystem chips in. I've seen a lot of cases where banks now start their own fintech accelerators so that they can, from the very beginning, tie up with a lot of startups. What do the startups get? They get access to the bank's API sandbox, they get access to the technology support, they get marketing and compliance support, which helps banks and startups co-create, collaborate, and then take the product to the market. I think those are the innovative approaches towards going to market, and that's what we look forward to more in the industry. And I think as a regulator, RBI is also doing a lot. We have seen a lot of innovative initiatives coming from the Reserve Bank Innovation Hub. The latest one being this Vanari Tech Sprint. A lot of players came together, thought about newer ideas, created prototypes, MVPs, and now they are scaling up on products which are going to change financial inclusion for women. So I think many more such initiatives coming up from the regulator, from NPCI. I think NPCI has done some fantastic innovations, UPI with ONDC coming up. I think the innovations in India, the India Stack, the JAM framework, what we have in the ecosystem actually supports innovation that can be done, and there is immense possibilities for banks and fintechs to innovate. Thank you so much.
Thank you. With that, we close the panel. Thank you, gentlemen, and thank you, Jasmine. It was I had a lot of fun. So thank you so much. Thank you.
Thank you.